Welcome to Money Clearly, the podcast that explains everyday money without the mystery. I'm Bridget Gale, and each week we break down the money questions that come up in real life, at work, at the bank, and at home, so you can understand what's actually happening with your money. Today, we're talking about how bank accounts are priced, what free really means, why fees exist, and how to tell whether an account actually fits your life. Before we talk about fees or rules, I want to say this clearly. If you've had the same bank account for years, or you're not totally sure why you're paying certain fees, that doesn't mean you made a bad decision. Most people open their first account because someone else chose it for them. A parent, a bank employee, and then life changes. Income changes, how you use money changes. But the account and the rules of the account often stay the same. So today isn't about fixing mistakes. It's about learning what to look for so you can decide, when you're ready of course, whether what you have still makes sense for you. And if you've never opened an account before, this episode is about knowing what to ask so you don't end up in something that sounds good at the moment but doesn't fit how you actually live. So my goal here is that if you've never had an account, or even if you have one now, you could confidently walk into a bank and listen to what the employee tells you about the different bank accounts that are there, and you'd be able to understand what they're saying, see if those things, the criteria that they're giving you, fit your life. Also, you could go online and go to any bank or credit union's website and see what they're offering. Does that make sense for my life? By the end of the episode, you should be able to recognize common bank fees, understand what people mean when they say that an account is free, and know which features actually matter for you. We're not changing anything today. This is about clarity first. Before we talk about free accounts, there are 3 terms banks use constantly that are worth understanding. The first is the monthly maintenance fee. This is a fee that some banks charge just for having an account open. The second is minimum balance. This is the amount of money that the bank expects you to keep in the account to avoid certain fees. And the last is electronic funds transfer, often called EFT, and direct deposit. These kind of go hand in hand because direct deposit is a form of electronic funds transfer. So what do those words mean? Well, electronic funds transfer is just a very general term for money moving electronically between bank accounts. Direct deposit is a specific type of EFT. It's money that's moving from your employer's bank account to your bank account. So these 3 ideas are going to show up again and again when people talk about bank accounts. And we'll come back to them to talk about how they signal whether an account is designed for you or not. But first, let's take a step back and talk about why bank accounts aren't actually free. So what does this mean? You see this all the time online. It'll say, come to so-and-so bank, we have free checking, we have free savings. So what does that really mean to you? Well, what that means is there is no monthly maintenance fee. That's the only pretty much guaranteed thing that a free account means. That's all. It doesn't mean that there's no rules to the account. It doesn't mean that there's no conditions to the account. It simply means that if you open up a bank account at that institution, you will not have to pay for having the privilege of having an account open month after month. There are some checking accounts that truly are free, meaning that there are no fees whatsoever. They have no monthly fee, they have no minimum fee, and they have no direct deposit requirement. A lot of times those are offered by online banks, but sometimes there are larger banks that offer them as well. This is where you're going to have to read the fine print of each one of the bank accounts that you're looking into. You need to check and see, what does their free mean? In addition to no monthly maintenance fee, does it mean that I don't have to maintain a minimum balance? Does it mean that I do or do not have to have direct deposit hooked up to that account? because some of these free accounts, they will waive fees, but only if a condition is met. For instance, there might be a free checking account that waives the monthly fee and also waives the minimum balance, but only if you have direct deposit. If these things fit how your money already moves, then it really doesn't feel like a downside. There's no negative to it. If I already have direct deposit and the account requires that I have direct deposit, then I'd never hit those fees anyways. So this is why you're trying to check and find out, how does this apply to my lifestyle? Understanding why those rules are there and understanding what they actually mean is more than having a label on it, right? It doesn't matter if it's called free checking or if it's called total checking or whatever the label of the account is. What the important thing is that you check all of the rules or the stipulations on the account and see if you meet those criteria such that you don't have to pay any fees for using the account. Banks need the fees because those structures support their cost of operation. They need to pay their staff, they need to upgrade their technology, they need security, they need customer service. So fees aren't punishment, but they are signals as to who the account is designed for. And if we can avoid paying fees, obviously we want to because they quietly drain our money. We also have another job for that money, which we'll talk about later. But you can think of these as signals. If you're paying a lot of fees, then it probably means that that account isn't working for your lifestyle. So let's dive a little bit deeper into each of these types of fees. The monthly maintenance fee tells you something about the account's expectation. Right? Some accounts waive it if you have a certain balance, some waive it if you have a direct deposit, and sometimes they don't waive it at all. The fee itself isn't really the point, but what matters is whether this rule fits how your money actually moves. Are you constantly moving around this rule, or does it not really matter to you? If you don't have, if you have an account that has a monthly fee and you notice that by the end of the year, it's draining money out of your account that you'd really rather put somewhere else, then this probably isn't working for your lifestyle. The next term, our minimum balance requirement, this is an interesting term because it doesn't always mean exactly what people think that it does. It isn't just a number. So if they say keep X amount in your bank account, it's not really just that number because it depends on how the number is measured by the bank. For instance, there's some accounts that are going to look at your average balance over the month. And as long as your average balance is over whatever that minimum balance is, then they won't charge you a fee. Other accounts, they'll charge you a fee if your balance drops below that minimum even once. It's not based on an average, it's based on if you're spending and you go X or below, as soon as it hits, then you get charged the fee. It's the same requirement. You'll see on these pieces of paper or whatever they're putting in front of you that this account has a minimum balance requirement. But it's really important to understand how that minimum balance requirement works. Is it an average balance so that if you took money out and dipped below the required minimum, but then you deposited more money and bounced right back up, you will or won't get charged the fee? Or is it an account where as soon as it dips below that threshold, you're getting charged the fee? It's not about responsibility here. It's not about what am I doing right? What am I doing wrong? This is the way that this account is designed, and you need to figure out if that's going to work with your lifestyle or if you're constantly going to be struggling to not pay these fees. Another thing you'll hear a lot of when we talk about banking are ATMs, and that stands for automated teller machines. This is where you go to access your cash, to get out some money. And ATM access matters, but it really matters differently for different people. For people that rarely use cash, ATM locations may not matter much. Maybe you only get it every once in a while and you're able to get cash back at the grocery store. But if you're a person that relies on cash or you need to deposit cash regularly, then having ATM networks around you may matter a lot more. So the thing to know about ATMs and why it's in our fee category here is because the ATMs can involve not one, but two fees. One fee gets charged by the ATM owner, and then one fee gets charged by your bank. Understanding who charges what will help you recognize whether you're supposed to be accessing your ATM in this way or not, and whether you want to be paying the fee for the extra access. If you use the bank's own ATMs, typically they don't charge you a fee. So if you have a brick and mortar bank and you're able to go to the bank lobby or right outside of a branch, then you can get out your cash and you don't get charged an ATM fee. But if you've ever been to a concert and you absolutely have to have that awesome souvenir and they say, sorry, we only take cash, and they point you to an ATM machine that's right next to it, you better believe you're going to get charged two charges. You're going to get charged by the owner of the ATM so that they can make their fee. And your bank's going to say, wait, you accessed an ATM that wasn't in our network, so you're going to get charged a second fee. Understanding what's going on with the ATM situation is important for people that are using cash a lot because it can save you a lot of money by not getting charged double when you're trying to use an ATM. And this also may be a reason that you choose a certain bank over another is because their ATM access is larger. Being able to access that network all over the place could also be another important decision for where you open your bank account. Now, there are online banks that need to compete with brick and mortar banks, and it makes it a little difficult when they don't have branch locations to be able to point you to go get your money out of the ATM. A lot of times, these banks will have reimbursement fees. So if you use an ATM that's not their ATM, then they'll say, okay, since we don't have a lot of physical branches, or we have no physical branches at all, we'll reimburse you every time you use an ATM. This is because they don't offer in-person access. They're willing to offset that by covering an ATM charge. And for some people, this will align well with how they use cash. Maybe they don't need cash a whole lot. But for other people, having a branch next to them matters more than having the ability to get their fees reimbursed. This isn't a perk. It's not a trick. It's a signal about how this account is being used, how the bank is expecting you to access your money. What about this whole online banks and in-person banks, and how do I choose what's right for me? Well, online banks often emphasize digital tools. They might make transfers and things easier for you. They have remote access. In-person banks will emphasize branches and cash handling and face-to-face help. So for someone who regularly handles cash deposits, having a branch nearby may matter more than digital convenience. But for someone who's paid electronically, who rarely uses cash, who's very into being able to access everything digitally, that may fit better with an online bank. Neither one is better. They just serve different needs. Again, the fit is going to matter more than the label. You may also hear people compare banks and credit unions. At a very high level, the difference between the two is simply structural. Both of them are going to have checking accounts. Both of them are going to have savings accounts. The difference is that banks are for-profit institutions, and credit unions are typically owned by their members. It doesn't make one good or bad, but it does mean that they're built with different assumptions about who has access, where they have access, the scale of your access, and who can become a member. Those assumptions then show up in the rules of the bank or the credit union and the availability. Here's what something like this could look like in real life when we have different account structures and they need to meet different ways of using money. So let's imagine that we have two neighbors living in the same city. Fred is a retired teacher. His income is predictable, his spending is local, he values familiarity and nearby access. The account he uses is designed around people whose money stays mostly local. He decided he wanted to use a credit union because their rules fit how his money already moves. He has a branch right next to him. He can walk in and he can talk to someone face to face. If he's having trouble moving his money, then they help him move it and he's happy as happy can be. Now, let's imagine his neighbor, Lisa. She travels frequently for work. She needs consistent ATM access in multiple cities. She may be in Los Angeles one day and the next day in New York City. Maybe she needs to be able to tip a valet in LA and a baggage boy in New York. Maybe she doesn't always have cash on her, or she needs to replenish her cash. And sometimes she even gets to travel overseas. She needs foreign currency. So for her, the same things that are important to Fred about being able to walk into a familiar branch, being able to talk to a familiar person, that doesn't matter as much to her because she prioritizes access. She needs scale. She needs reach for her banking needs. The account that she's using, she chose a big bank because it was designed around those things. Not because it was better, but because it was built for that kind of usage. People in the same city, neighbors, 2 different lives, 2 different designs, 2 things that fit each of their lifestyles better and couldn't really be interchangeable. That's alignment, when you've aligned your bank accounts with the way that you're trying to use your money. Neither one of them has an advantage over the other. It's simply that they found the right fit. Everything you've heard so far is about recognizing fit. We're not trying to make a change right now, but we're trying to understand if what we have at the moment is what we need for our life and is moving in the right direction. If you don't have a bank account yet, then you're thinking about what are the things that are important to me? What are my priorities? Remember that you're always allowed to change banks. You're also allowed to stay where you are. Switching banks isn't a failure. Deciding that you want to go to a credit union or deciding that you want to take your money out of that credit union and move it into a bank. These are fine. No one's going to come after you for taking your money out. And staying in one place isn't complacency. What matters is that you have a choice. You don't need to find perfection, but you need to try to find alignment. Find accounts that align with the way that you use your money. Your choice will start by noticing the signals right now. How are you using your money right now? How are the fees showing up in your accounts right now? Are you actually getting charged anything, or is it smooth sailing? Are things going along and it seems like everything is just locking into place? For this week, I want you to look at your account terms, not at your balance or at your transactions, but actually look at the rules of the account that you currently have. If you don't have an account yet, then try looking up one of the banks that's close, a credit union you're interested in, and read the rules for a basic checking account. There's no action required. Understanding comes first. So today was about understanding. We're trying to set a lot of groundwork here so that we can get to a place where money will give you choices instead of stress. Next week's episode, we'll talk about why your bank balance is lying to you. Thanks for listening to Money Clearly. Take care of your money so it can take care of you.